Hello, good afternoon, guys. This is what is called Trading View. If you are new to trading, this site is called Trading View. This particular one is for the reef. There is a standard one for currency pair and all this gold, cryptocurrency, stock, futures, index. So you can download it on your phone. This is what you can download on your phone. This one you can operate with it. All these tools you can use it on your phone. When you go to Google Play Store, you get it there. You can use this on for cryptocurrency and stock, forex, currency pair, and all those and the rest. But this one is for the reef. So if you don't have a system, you can't have these charts. You can't have this chart. The chart is rough. I'm sorry for that. But as I use it, I analyze with it. I will clear it out. I'll clear it out very soon. I'll clear it out. So let me clear it out. So let me clear it out now. Remove all drawings. Pew! Oh my God! This is a big work, man. Okay now. So starting from the beginning, it's fine. So let's work on this particular view right now. So I love using Trendline. The strategy is about Trendline. So I think we should just dive into Trendline now. So okay, let's first know what is support and resistance. A support and resistance is I just decided to be the highs and lows of price movement. Like this is the high, this is the low. This thing I'm about to tell you now is a very big secret. Is a big information, not a secret but a tangible information. How did I get highs and lows of the market? This is 1 hour chart. When you go to, we have different time frame. This is 1 minute, 2 minutes, 3 minutes, 5 minutes. So in 1 hour chart we have this 15. I use 15 minutes and I use 1 hour and I use 4 hours and I use 24 hours. I don't use other ones here because those ones will confuse you. So we have this 15 minutes now. We have how many 15 minutes in 4 hours? That's 4, right? In 1 hour, that's 4. So 30 minutes in 1 hour. Candle. 2 15 minutes candle. One candle like this. 1, 2, 3, 4. 15 minutes candle is what we have in 1 hour. We have 2 candles, 1, 2 of 30 minutes candle in 1 hour. In 10 minutes, we should be able to count. So in 4 hours, we have 4 hours candle. 1, 2, 3, 4. 1, 2, 3, 4. Make this 4 hours candle. So now we want to check the highs and lows of the market. Here, let's start from here, from this move alone. Let's start from this move. So these are I separated these tools. When you go here, you can click, you can start the ones you want. When you click on it and hold, you can start the ones you want. Just try to master it. It will take time, but just try to master it. Try to work with it. So now I use MACD. This MACD. When you open MACD, let me close this one. When you open, you can get indicator from here. Go to MACD, then select it. Then what do? You double click on this MACD back. Then remove all this Instagram, all this MACD and sound and signal. Just leave the Instagram alone. And I love to make it solid a bit. I change it to white here, then okay. So with MACD I get my highs and lows. Here the MACD is telling me that this is high, and it's telling me that these ones now are low. So you will have to check from where to where, from here from here to here is low. So you have to find the lowest among the candles that correlate with this MACD, which is this one. So now we put it here, like from here now to here. So this is the low. Where is the high? This is the high. You can see this is the high. From here, we pick this from here to. I love to take the wicks of the candle. We call this long ones. These lines here, we call it wick. So I love to use the wick as the up and down of the price. This week. So where is the next top here? You can see the MACD is showing us top. This is another top. So all these top now, they are not known as top. Though you can be thinking they are top, but they are not. So the MACD is telling you where exactly is your top and where exactly is your low, the highs and low. So here we can see another top, which is here. Though it's not validated, but let's just put it there. If the market comes there later on, you can see the market even have effect on it. When you go back in time, you can see the market struggle to climb. When it gets there, it came back, then went back, then slides it up. So it stands as a resistance for price. But let's just focus on this angle for now. We are trying to get the highs and low with a signal from MACD. This is another high. You can see this top. You can see there is a little bit of it here. So if you go to the 15 minutes chart, you will see there are too much of noise. You see many top, many bottom, many top, many bottom. But using the hourly, you can eliminate those noises. This is another low. This is another low. This is how I call this trade. With this low. You can see another low. This is another low. You can see that when price got there, the price is still. This is still going on right now. When the price got there, it came back down directly. It rejected it. So this is another low, which is standing right now as support to the price. Standing as support. Price got there and now price is resting on it. It's not finding its way through. So it's trying to pull back. Right now, it may slide it up, but it's sounding right now as a support. You can see this is the low, this is low. You can see this is low. When price went back up to create high, this is another high. So we can just use this. This is another high. This is another high. This is another high. So price came back again. It came back again. Didn't find a way through. Trying to go back. Found a resistance at here, but we won't draw that. That's a noise. You can see when price even got there, price is not even recognize it as resistance, though there will be spike in those places. This is how I take spikes. Maybe you just feel like taking spikes, you can just draw it. When price gets here, it's going to spike. It's a must. Even when it gets here, I took this trade, I'll show you the result. When it got here, it spikes down. So at least with that you get some dollars. If you have money, if you have And this one now when I put $100, it gave like 20 something dollars on demo. Don't be attracted to money. On demo, don't be attracted to money. I'm sorry for calling money, don't mind me. So this is another low. This is where the price reversed. I took this trade on my MT5. I'll show you it gives $40. Why I didn't go too much was that I don't like buying on crash. I don't like buying on crash. I took it to this place. I took it to this place. I don't like buying on crash because of the spike. I'm always afraid of the spike because you don't have control over the spikes. But when it's selling, you have control over the spikes. You have control over this bullish candle because they come out gradually. You can remove your money at any time you want it. You can decide the risk you want to take, but with this spike you can't decide the risk you want to take. That's why I don't like buying on crash. I buy on boom and sell on crash. So this is support and resistance. And this is one thing I want you to know. Let me delete all this. Ping. Let me delete all this. This is one thing I want you to know. I can see you are getting some things wrong there. This is one thing I want you to know. This place now is a support for this price. When it got here, I wanted to climb back. It stands as what? A resistance. So the same spot is the same thing as support, and later on it will now turn to resistance when price is trying to come back to that side from below. You can see it here from below. It will stand as resistance, but when price is coming from the top, it's standing as support. Price is finding somewhere to rest on, so it's fine. It turns to support. But when price is going up from below, it stands as resistance, stopping the price from getting through. So that's what I want you to know. So it's not that you go and draw support on the top and come and draw resistance on the top, come and draw support on the bottom. No, that's very wrong. Let's take this. Let's understand it. The same level is support and resistance. The same level here is support and resistance. The only, when you are talking about this type of this thing, when you are talking about this, you're talking about price on the top and coming back down to the bottom to draw your, this is called supply and demand. This is called supply and demand. It's not support and resistance. Price got here, went for what? For supply, came back here to demand. You understand? Came back here to take order, then went up to supply. I think I'm getting that. Supply and demand. So here they are demanding, here it's supplying. So support and resistance is a different thing to supply and demand. They are two different things. I think you get that. Let's move on. Time is going. Time is not on our side. So what else? Yeah. Now we are going to Trendline. This is the strategy that I use here. This is strategy. Trendline. With Trendline, you can spot and get your spike with Trendline. So Trendline is very important here. It's very, very important. Very, very important. Very, very important. It's just for you to know how to draw it. Just for you to know how to draw it. Why I love to draw my trend line is I check for the top, this top here. There's this top and this top. So I check for the top, the two top, then I connect them, then I stretch them to the future. Just make it as accurate as you can. At least with time when you are doing it, you will see that in fact it will be like magic, like how did I know that this thing will happen here? So but you just have to try to be doing it. Here, let me show you another trend line here. You can see this is top, this is another top, this is another top, this is another top, but we are using this now, and this is another top, this is another top. So you can connect them together. These spikes, before this thing even spike, I have this trend line already. I have it already there. I connected it like this before they even spike. I connected them already. Then this is like a channel. This is like a channel. So I was just taking the trade that when you touch it, touch it, touch it, touch it, touch it, go back. So this is like a channel. Just try to understand it. If you find it difficult, you can just leave it. Trading is it's not an easy thing now. I won't lie to you. So come here. This is your support level. This is how I catch this trade, because I can see the price was unable to drop. It was unable to drop. And how did I get it? Was I went to the pass. I went to the pass to draw it out. This is why I don't like this trading view. Just go Jerry. So why did I conclude that? Why did I get to a conclusion that something is fetching here? Well, because I found this. You can see this is what I found. Firstly, I found this. You can see this. I found this resistance, so I draw it. I was looking for a sell anyway, that if the price gets down and close under it, then the reaction of the candle is what I will use to enter the trade. That's why you have to know your candles also. You have to know your candles. We talk about the candle patterns. So what else? Okay, we are talking about trend lines now. So if you've gotten this, you can use your support and resistance to take trades. Okay, how to use your support and resistance to determine your take profit and your exit. This is the support, now turning to resistance. So what do? You have to put a box there, then you know that this is your next target, that if the price gets here, there's probability that the price will turn back. So there is probability that the price will return back. Yes, there's probability that. But here, what I want you to understand is trend line is the key level where price returns. There are key level where price reverse. That's one thing I want you to understand here. Trend line are the key level where price reverse. This one is still going to break down. I'm sure it's still going to break down because the MACD has not yet completed forming. It may still break down. It may under maybe sharp. Maybe it's consolidating, then it won't break. But like this, it may still break down. I think I drew something here also. Was it here? Here? I think it's here. I think I drew something here. That time. I think so. So this price broke here and was forming big boy for me. Okay, I use here. I use here. I use here. Yeah. So I even thought the price would continue back here to the downside, and the trend line too was somewhere somehow somehow align with it. Somehow align with it. But didn't know. It didn't. It. Okay, let's go now to Trendline. How to use Trendline. This is how to use the Trendline. So okay guys, trend lines can also stand as dynamic support and resistance for the price. It can also stand as support and resistance for the price. I even love trend line more than this support and resistance, this horizontal support and resistance. This one has like there are slant lines drawn to attach different lows and different highs of the price. Like here on B now, what you should be attaching more is the top of the market, the top because it is spike we are looking for, the top. So sometimes price will still break through. And price got here, it came down, found support. This support that the price found is through trend line again. Let's see, it's through the trend line. You can see it's through trend line. That's it. So price got here, found a support on the trend line, goes back up with force, it came back down. Came back down. So, and got here. If you go to the path, you will be able to connect this line. You connect it to something. So how do you determine to enter a trade with your trend line? How we determine to enter a trade with your trend line is should be a confirmation of a candle, the reaction of the candle. As you can see this now, this is a rejection candle, telling us that price didn't find a possibility to go up. So this is a rejection candle. You can see rejection candles here. They are with wicks. So the next candle you see like this will tell you that okay, price is now ready to sell. These are rejection candles. When you check here, this is not a rejection candle. This is a rejection candle. You can see it's telling you that price is having the ability to sell. You can see rejection. This is two confirmation. This confirmation. So what you just do is enter your trade. When you see this type of rejection candle, enter your trade. Surely the market will like to come back to retrace and put your stop loss above the next candle, above the trend line. Just make sure it's breathing. The best place to put your candle is here. To put your stop loss is here. Best place you could is here. Is here. So you have to risk the money that you are willing to lose. Then where should be your take profit? Your take profit should be here on this next support level, on this support level. This should be your take profit. As you see, when price got here, you can wait for the reaction of the market. That what is the price going to do? Since you are selling, you have more advantage over the market. Since you are selling, the price will just be doing slow before it can reverse to you. So here you already have 200%. This 2% times 100. So this 200% already. Now the price broke through and was trying to come back up stand as what? Resistance. You can see the rejection candle here. This is a rejection candle. Then the price went back down. So where will you know that, okay, where is the price going next? This should be the next place the price is going. When we check our MACD, the MACD is telling us here. The MACD is telling us here. This is where the MACD is telling. So you can just stretch it to the downside, but this is this is too much, guys. This is too much. This is too much. This is too much. But if you just the way I take trade like this, like when I see this consolidation, I know that it's very difficult for price to break through all these consolidated places. So it's better to just take it this way. So in short, we are talking about trend lines. Let me try to draw trend lines here. So we have different type of, we can draw a trend line in different formats. You can see when price broke through here, you know that that's a sell. And where do you take your profit? You take it here. Take your profit here. Or you take it here. Or you take your profit here. So let me see another trend line that we can support. This is another trend. Let's join the highs, the high, and the high. You can see. So when you see this, you are waiting for what? A rejection candle. This is a rejection candle. After this, what do? You enter your trade. And you take it to the downside here. Then you put your stop loss above the previous candle, above the previous high. The same thing happened here. We found a rejection candle. What do we do? We take it right. Let's put your somewhere here. Then the take profit should be here. This is like 1.6%. This is like 160%. This is 230%. This is 240. So this is how to draw a trend line. I think you are getting it. If you don't get it, just let me know. I will explain better. So let's stretch it back to the time. So here now you can see the price broke through. That's telling you that is a buy. You are in for a buy. Where do you take your profit? You take your profit. This is the low. Yeah, this is your first take profit. Here should be your first take profit. Here, the low. You can see this is the low. This is another low too. So, and this is high. You can see this is the valid one. This one is not valid. And so when price wanted to go back up, it stopped around here, not around here. So this is how you know your valid support and resistance. So this should be your first take profit. That's like 1.2, which is like 121%. And so you just take it, take your profits and get out. Or if you still want to wait and see maybe the price will still go up, you can. So price broke through, was coming back, found the support, went back, found the resistance here. You can see found the resistance around here. The resistance is here. Then slice it back, form a trend. You can now join the two lows again to form a trend line. This is the two low, then stretch it to the future. Because you won't see the price, this is how the price will first be. So what you do is to stretch it to the future. Just stretch it to the future, stretch it to the future like that. Yeah, so we're expecting price to come back there. When you see price coming back on it, then you should be expecting a jump up. But how will you confirm it? Is by looking at the candle that forms. You can see this is a rejection candle, this is a rejection candle. So you have to study rejection candle. Go to Google and type rejection candles, you will see it there. So this is a rejection candle. You can take your trade here too. That's 1.5. Then this video is becoming too long. Thank you. I will try to send more videos to you. Maybe the one that YouTubers have already done. I'll try to send it to you so that you can understand support and resistance and trend line, how to draw the trend line. So yeah, trend line works very perfectly. If you go to let's go to volatility 75. This is volatility 75. Trend line works like magic here also. You can see it. This is volatility 75. And you need to know your patterns. I sent a picture to you. Try to master that picture. You need to know your patterns. You need to master this head and shoulder. Refuse to. This is shoulder, this head, this shoulder went back up, did not come down sharp. So trend line worked also here very perfectly. Trend line worked here very perfectly. Very perfectly. I took this trade. I took one from here, then this to here. I shared the chart to you on what is it called, on the group. So I took the breakout. This is a breakout. You want us to talk about breakout, or you go to YouTube and check what breakout is. So breakout, this is breakout. Breaking out of the trend. Breaking out of the trend.